You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we're back. It is time once again to view some volatility. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Got another fun one coming up for you later today on the Pro Site Options Oddities, coming up at 2 p.m. Central. If you don't know what the heck I'm talking about, you want to learn more, theoptionsinsider.com/pro is the place to go to learn more, kick the tires, and light the fires. And you can join us on the Oddities. You can join us on the great Pro Q&As. We've already had 6 awesome ones. It's hard to believe we've already had 6, but we already have a great one again this week. You can go check out all of those on your exclusive Pro podcast feed. They're there in your hot little hands whenever you want them, even after the fact. So it's pretty cool. theoptionsinsider.com/pro is the place to go. And of course, you know where to go for all your questions and comments. Hit us up. We do love to hear from all of you guys and gals out there. Let's see who we're hearing from on the program today. First, let's go out to the dark and stormy shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, how go things on the dark and stormy shores, sir?
Actually, for the first time, I think, since you started using that it is actually dark and stormy on the shores of Maine today. So I guess we got some storm coming from Boston. So it's sweeping the East Coast with, apparently there's supposed to be 50-mile-an-hour winds, but I'm not getting those.
Anyone who grew up in New England knows nothing good comes from Boston, sir. But see, if I keep calling the shores of Maine dark and stormy, eventually it's going to come true. And then I look prescient, sir.
You like to claim prescience in your own network. So who am I, just a mere guest host, to judge who is prescient and who is not?
It's the prerogative of the big host chair. Someday you'll get there, Mr. Rock Lobster. Someday. And also joining us, holding down the MIAX hot seat. It's that time of year, listeners. We're kicking off a new earnings volatility season. So who do we have holding down the hot seat? Our old friend, the Oracle of New Hampshire himself. He's kind of dark and stormy shores adjacent, just one state over there in New Hampshire. Mr. Matt Amberson, the founder over there at ORATS, a.k.a. Options Research and Technology Services, a.k.a. Option Rats on Twitter. Give him a follow over there. He's a good follow. Mr. Option Rats, welcome back to the program, sir.
Yeah, I've been following Andrew since going into his pit on the floor of the SIBO, and now I'm just below him, in between Boston and Maine, here in New Hampshire. So yeah, Andrew and I go way back. So it's great to be on with you guys.
And this show goes way back to the dark days of the early primordial ooze days of volatility products, as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down what the heck is popping off, what is kicking, what is lighting up the tape in the world of options this week. Remember, it was a truncated holiday week, no trading on Monday here due to the 4th of July holiday here in the U.S. If you're international, hope you had a good long weekend and enjoyed it nonetheless, even if you didn't have all the fireworks and everything else going off out there. That means we had an interesting week. We thought, vol might come back after the long weekend, and it came back a little bit more aggressively, more midweek than perhaps we thought. And now it's coming back down the other side. We're seeing the markets ending the week firmly in the green. Most of the major indices up around 1% are pretty darn close to it. The Dow actually leading the charge to the upside, up about 1.15%. S&P up about 0.9%, and the NASDAQ up about 0.8%. So apparently all the concerns we had yesterday about yields and Delta variants and everything else, all that's just swept aside. We're good. Let's rally this bad boy. And so we're seeing the vol products take a break, but net, they're still up on the week. Remember, going into the long week last weekend, they were crushing all this stuff. So we're still much higher than we were this time last week. Spike's going to kick off the show is at about a 16 3/4. It's a little bit below that now, but it's up about 1 3/4 points from where it was this time last show. Hit a high of almost 1986 during the middle of the week, during the height of the sell-off earlier this week. VIX cash was at about a 16 1/4, and we kicked off the show. It's also up about 1 3/4 points from this time last week. It hit a high of over 20, broke the 20 handle, hit about almost 20.5 earlier this week before going right back down to the 16 handle again. So we've said it before, we say it again. You have upside, and this applied to me this week too. I had some upside flies in VIX. I didn't get a chance to get off in time. So if you're not quick on the trigger finger, listeners, you are going to miss the upside over there. An old friend VVIX at about a nice 111 coming into showtime. It's up about 6 points from where it was this time last week. So let's start in our hot seat. Mr. Matt, we'll get to all the earnings and other fun in a bit, but what is lighting up your tape right now? I know you run a lot of models over there in the land of ORATS. You're always crunching the numbers, looking at broad volatility and volatility regimes. What is lighting up your tape this week, sir?
Yeah, there's a lot going on. Still, the Robinhood effect is there, but it's dampening a little bit. When I say that, it's the way out of the money calls. They're like 5 delta calls, and we look at those divided by like the 75 delta calls, or at least those strikes, and those have come down a bit since the highs, but it's still there. There's still a Robinhood effect that's alive and well, but the SKEW is steepening, so they're getting puts. And one of the things I looked at today was the last time the components of the SPY had such a big differential, because they're really low in the slope, was right before the vol apocalypse easy for me to say in January, late January of 2018, and we all know what happened in February of 2018, and then in 2007. So I look at some obscure things, admittedly, but I think that there's some very interesting things to look at once you get below the just the VIX and that once you start looking at some component SKEWs and the like, that's where things start to happen, especially before something major happens in the market, Mark.
Isn't it funny? And I remember dates and things for other big events in the marketplace, but sometimes the actual time and period they occurred gets a little bit lost in the murky sands of time. But for whatever reason, Volmageddon, VIX-Ocalypse in that period there in February of 2018, for whatever reason, that one's glued in all of our brains, man. I'm not sure why that is. We've seen other shocks since then. Maybe that was just the first big shock in the modern era that we all kind of remember, Mag.
Well, you had 2017, which was so quiet. I mean, what were we talking about? We had to fill a year there, and then all of a sudden, in one day, boom.
Trust me, as a guy who made his living trying to talk throughout the year of 2017, it was a challenge. It might have been one of the more challenging years of my professional career. So I guess when you think about it, you're right. In that context, coming off the just malaise of volatility, you're pretty much a nothing year. Think about that, listener. We're talking about insane weeks every week for the better part of the last year and a half right now. So if you're new to this market, that's kind of what you're used to. But there's a whole year where a whole hell of a lot of nothing happened. Now think about that from that perspective, and then think about all the things that are lighting it up right now. People gobbling up upside 5 standard deviation away calls and things like that. And think about how good of a trade that would be in that environment. So that's another reason why probably that Volmageddon stands out. Everyone's like, oh, wow, Vol is fine. Everyone was just waiting for that moment, so we got it. That's probably why it's so indelibly imprinted on our brains. Mr. Rock Lobster, do you have any enduring memories of Volmageddon, and what is lighting up your tape this week, sir?
Well, I think Volmageddon stands in everybody's brain because one is, and what Matt said, and we all laughed, right, all year. Saw you and I, like, Trump is a single-digit VIX president. We couldn't believe it week after week. we couldn't believe it, and eventually we were proven right. But it was, and I think everybody got fat off of the, basically the VXX, UVXY, SVXY, XI, all those roll yield products. Like if you weren't long XIV, you were dumb, and if you weren't long SVXY, you were dumb. And it was just an amazing year for roll yield, right? Probably best year ever. And and here's something for listeners: like when something has an amazing year, like off the books, it is rare that it ever repeats it the following year. So, and I just think like you basically lost like a whole generation of short vol investors just got, taken to the woodshed. So, in that way, I would say, that's what I think sticks because it was so brutal. And somebody like me who actually kind of walks the ball up, because I trade more of a strangle strategy in the vol products. It suits me a little better. My timing and everything works pretty good. But the speed, and I think this is probably one of the first times. And we still really haven't gotten the info on this. And I know Mark had looked into this. Mark Seabass had looked into this a little bit. Like I'm still a believer that the actual way those products were created were like somehow that squeeze was engineered to destroy those products. And they led to their own demise basically by having to buy a bunch of futures only to suit themselves, right? Because they're the ones that had to cover just because. And the more they forced cover, the higher things went. So I think they got into a cycle of that they just basically ate themselves to death. So anyway, I think that's why it stands out. And it's and it probably won't go away. Now, notice they're trying to rush those products, similar products, back into the market. So, with Wall Street, if something worked once, they're going to try it again. And to be honest, I don't think they were that bad. We probably, if there's a short product, like the half leverage on it is not a terrible idea. It's just not very interesting to trade. But, in the interest of keeping the public, protecting them from themselves, it's probably not a bad idea to do that. But it just becomes an uninteresting trade to me. It's a good trade for the dips like SVXY or something like that. But anyway, so that's what I just think. It was just the speed and just the fact that people, the Twitter sphere, everybody was talking about how great those things were, and they went straight to the moon. I mean, we forget how exciting those products were, like XIV going to the moon and SVX. Like, we forgot, like, everybody's like, wow, if you're not long these things, you're an idiot, and the assets under management got so gigantic. And I think they just overwhelmed the future market. They're gaping maw of having to cover their own future positions, just crush them. So anyway, I think that's what stands out to me, just the amazingly fast and total collapse of a product. Like, I'm trying to think the last time we actually saw something like that, where a product just went to zero like in a second. And I actually, maybe Matt can remember, I can't think of one. We've both been around for almost 30 years doing this, and I can't, like, at least in that time frame, except maybe some famous Goldman Sachs structured products from, the 60s or the 20s or anything like that, where something literally went to zero. And there was nothing you can do about it. And I think that's what sticks in my head.
All right, that's a long way around for the Volmageddon. What's lighting up your tape this week, sir?
Well, I think the Chinese threw some sort of magic dust on the market and say, we're going to lower rates. And I was just looking at, I actually had my whole thesis this week was basically the Chinese were, trying to basically shake their own equity markets out for a reason that I couldn't quite figure out why. Maybe it had to do with currencies or switching to a digital currency or something. But I mean, the Chinese government basically says, listen, if you're a big company and you're in this sort of digital payments thing, we're going to get into your grill. And I don't know if they want the data, what the thing, like, it looked like an insane amount, or basically, what's a public company in China? It's like, okay, well, you're a public company and the Chinese government is going to make sure they know what's going on. So, I mean, look at BABA, right? So that stock traded $200 yesterday. And it like, why is that stock on Amazon is like, there's no top for Amazon and you can't find a bid for Alibaba. Now you tell me the difference. And the only difference that really is, it's not the size of the marketplace, right? It's which government can actually exert control. Like Amazon can do business in China, but ultimately they're housed in the U.S. So they have the rest of the world to deal with. Like Alibaba definitely is, a captive of the Chinese government. And I think, the market definitely put a huge haircut on that company because of that. And I think other Chinese companies, they're doing the same thing. So what I would say is like, that was a vol-inducing event. The announcement yesterday to kind of put the squeeze on more companies was a vol-inducing event. And then all of a sudden today, they're like, well, maybe we should backpedal a little bit. So what we're going to do, we're going to lower rates. And I think that's where we are. That's where we are right now. So with this round of rate easing, we could see like I think we see like a 14 handle on VIX. It might even stick around for a week or two.
It might indeed. Let's see what's going on, what's sticking around out there in the land of the futures. I am actually pleased to report we got some Spikes futures volume to talk about this week. Tom couldn't join us this week, but he did send over some of the numbers they're actually putting up. Seems like some of those incentive programs they're implementing over there at MIAX starting to kick in. Saw some decent volume, 1,478 contracts on the Spikes futures side, hitting the tape on Wednesday, nearly 3,000 on Thursday. He said so far today, coming into start of the show, he had about 1,200 on the tape. So I know they were having some problems kickstarting that. Seems like the incentives are going a long way. And for everyone out there who's looking at the options and writing to us saying, man, these options are kind of wide, that will help that. Getting more futures volume, more underlying volume going will help tighten up those options markets. It'll be nice and go a long way towards driving a little bit more options paper out there. In terms of the VIX futures, most of the curve pretty much up, at least the front portion of the curve. Latter portion, actually not. We'll get to that in a second. The July future coming into showtime was at about exactly a point higher than where it was this time last week. Last week on the show was exactly at a 17, which is strange. And even stranger, this week coming into showtime, it was at exactly 18.000 again. So it was exactly a point higher, which is odd. Don't see that too often, listeners. The AUG future is up about 0.8 of a point, and the SEP future is actually down on the week, down a little over half a point, about 0.6 of a point. Matt, I know you incorporate the VIX futures and the whole volatility surface into your models. Anything catching your eye out there in the land of vol futures this week, sir?
Yeah, obviously there's a bump in the futures curve, and this UVXY has just been flying all over the place. It was down at about 26 up to 32 and now down to 27. We've done a lot of back tests on UVXY strategies, so I've been watching those quite closely. But just a lot of volatility in those markets, Mark.
Indeed, Mr. Rocklops, anything lighting up your tape out there in the world of all things volatility futures, sir?
Yeah, well, we pulled back into what's now I think become like a stable of this market. You got like the high SKEW in SPX, like relatively steep downside. You have a VIX that stays, right around 16, 15 because of it. You have a super steep future curve, like as basically a symptom of the whole forward vol curve. And you just have like crazy, expect relatively high premiums for where we are. So normally when you have more compression, you have less premium, but VIX settles right back into this thing. So that's the way this market has been working vol wise. You get like the shorter term vol gets really low really fast, and the back month vol there's basically no sellers of it. And that's still here. And Matt was mentioning about the meme stock people. So I think this is still part of the effect. I don't know if this is like the Tesla effect in the S&P 500. It could be a part of it, just like adding that big, like a much more volatile product in there. I don't think it's big enough, arithmetically to do that. But all I know is this is like a symptom of the COVID era, and it's the opposite of 2017, right? Where you had weeks. You had actually weeks and months of single-digit realized vol in SPX. But even when you have weeks of single-digit vol in SPX now, VIX does not like going below 16 in the last year. So as long as this COVID thing is still out there, I think this is just a symptom of the market we have. And I think 16 is the new 12. Let's just say that. I think 16 is the new 12. And it will be like that until we figure out what to do with all this liquidity that pours into the market, or we figure out how to make this COVID thing just be less of a problem. Because the fact that Japan kind of like, we're going to declare a state of emergency while we have the Olympics. I don't think anybody what the heck does that mean? They get track and field, they're going to run around with masks on now. It's like, it's kind of, I don't know. I feel like it's kind of dumb at this point. But anyway, that's what we have. So from a curve point of view in futures, yeah, like we have this persistent bid. Like these futures are well over what we think our fair value should be at this point in the cycle. So if the back month vol is that, the difference between front month and back month vol is going to continue to be like this. And it's not going away until there's enough money to go just start selling puts again. And as of right now, it's still not quite there.
Not quite there, indeed. You know what is there, or about to be there again, listeners, is a little bit of earnings volatility. So let's dive into that next before we break down the options volatility products out there. Matt bravely ventured into the void at the beginning of last cycle, And I feel for you, Matt, because I've done that a couple of times. I thought this is the moment where the worm was going to turn. And yet, alas, it did not come to pass. Yet again, this cycle we averaged out at about a 74% for this past earnings season, listeners. So if you bought all of the names that we're reporting, man, that would be an expensive basket. You got back about 74 cents on the dollar throughout the season. So once again, not even breaking even on the vol buying out there. So an interesting time. Matt, you went out on a limb this past season. I'm curious, are your fingers still burned, still scarred from that experience? Are you going to bravely venture into the void again? What are you looking at? What are you expecting? What are you keeping an eye on for the coming season, sir?
Well, so we have an earnings effect. So an earnings effect is basically saying, okay, how much more is the move going to be than the expected move on earnings? And that has come down now finally, Mark, because the reason I think that it's getting to be a better time to be in the old long side of earnings is that earnings effect, the implied earnings move is coming down quite a bit. So we saw people not believing, and then finally it's starting to come in. So the biggest thing is now the market is reacting. They're bringing those expectations down, and we've had some pretty crazy Julys. July has had some big earnings moves, big earnings seasons. Just think back a bit. So it can happen in July. It seems like it's summer and nothing's much is going on, but it definitely can happen. So we've seen those coming down, but still, the average moves have come down too. So we've seen this, lack of return on owning the straddles. So the actual moves are coming down, the implied moves are coming down, and something's got to happen here. We have the theories that this whole Robinhood and the new investor out there doesn't care as much about earnings. I guess that's what you have to do with these valuations. You just have to keep putting in blinders or something on earnings. Earnings are becoming less important. It's because it's just such a large multiple out there. But at some point, Mark, something has to happen here to get earnings back. But I think that the important thing about bringing this information out there, even though we want to see it moving around a lot, is that it just hasn't been there. Meaning the movement at earnings, looking at the earnings announcements under a fine glass, and the investors just haven't been doing that, and again, I think it has to do a little bit with the Robinhood type investor, and a little bit that these multiples are so high that you almost have, you would think if the multiples were this high that it would be more important, but that we're seeing the opposite. We're seeing that the earnings are becoming less important. And we're looking at, we're coming up on the 13th of next week is going to be the start of these. We have, Goldman and JP Morgan, Pepsi, Bank of America, BlackRock, all coming out with earnings. Their implied straddle is all right around what the past earnings moves have been, over the last 12 quarters. So they're averaging, no one's making a big call out there. They're kind of putting a rational straddle out there. And what we've seen a lot is that these first weeks, that the owners of the straddles don't do as well as, in week 3 and week 4, just kind of it's consistent every earnings season. We see that. So it'll be interesting, Mark. We got this, the 13th and 14th, we're going to see some earnings, and we'll see how it comes out around the expectations.
So no official prognostication yet, sir, for how the cycle is going to turn out.
Well, I was trying to put in there that I have a twinkling of an expectation that there could be some fireworks. during this week, I think it's an appropriate thing to say. So I think there's going to be some fireworks this July earnings season, Mark.
A twinkling of fireworks, perhaps. You agree? You think this is the cycle where perhaps we could break the mold out there? We had a few sparks of life there towards the end of last season. Nike comes to mind, kind of ripping the cover off the ball. Not a lot of others like that. You need a few more of those, really, listeners, to start changing the narrative out there. So far, at least, but not so much, but we shall see. This new cycle begins. We have the financials kicking off next week, and that really gets things rolling into high gear. And hey, those have been rocking and rolling of late, so they could certainly be poised to outperform. In fact, a couple of them are actually pricing in a little bit more volatility right now, which is a nice thing to see. You don't really see that too often anymore. JP Morgan has moved in the past an average of about 267. They're pricing in $4.10 right now. So they're pricing in a little bit of rocking and rolling, which is intriguing and a lot different from what we've seen for the better part of the last year and a half now. So interesting stuff afoot. Not a ton of interesting stuff. There is some paper going up out there today in VIX land, 350. Again, not blowing the doors off, but again, the ADV has also come down quite a bit. It's down to 464. So it's probably going to break that today. So interesting. If we'll see if this trend can continue out here. In terms of the top positions out there in VIX options land right now, it's down to exactly 50-50 puts versus calls. No more 60-40 or 80-20 or anything like that. So read into that what you will. Does that mean the moment has come, that great moment of inflection where everyone's asking us, hey, is this the moment where I want to buy some upside? Well, earlier this week, the answer was yes. But outside of that, it is interesting to see that we are now exactly 50-50 here in the top 10 for VIX options. Cost you 143,000 contracts to break into the top 10. That gets you to the July 20 calls. Number 9, $1.55 of the July 21 puts. Number 8, $1.56 of the July 15 puts. Number 7, $1.73 of the NOVE, the first and only NOVE on our top 10 here. NOVE at 60, still hanging out there. Number 8, $1.87 of the July 18 puts. Number 5, July 40 calls, 196,000 of those. Number 4, 197,000 of the first and only SEP on our list, the SEP 25s. 200,000 for number 3 of the July 17 puts. Number 2, 290 of the July 16 puts. And yes, the big dog still. July 25 calls, 307,000 of those bad boys. Total of a little over 8.5 million contracts open right now, about 5.25 million on the calls and about 3.25 million on the puts. By the way, going back to that top position, the July 25s, obviously one half of the now infamous July 25-40 call spread that went up for size a few months back. Actually, it was back on April 8th when they put that up. Seemed like it was more recent than that, but it was back in April 8th. I know that when they put it up, July seemed like a very distant month. So it was a little while ago now. They put it up for a whopping $2. And we talked about it then saying that's kind of optimistic and interesting. And maybe we thought that was maybe a sign that people are going to start coming back to the upside again in VIX land. It turned out, at least for the better part of the last couple of months, it hasn't really been the case. This spread now not looking so great. Coming into the show today was trading for a whopping 35 cents. So this guy or gal is kind of wearing it on this one. They probably had a better chance to scratch it yesterday if they were so inclined. That July 25 call traded as high as $1.25 that I saw yesterday. So they probably could have got that spread off for at least $1, if not more, yesterday. So they could have cut their losses in half if they were quick. Like I said, yesterday, the vol bid was short-lived. So if they were quick, they could have got that spread off and kind of cut their losses in half. But apparently that was not the case. Mr. Rock Lobster, are you surprised that they did not come to at least pair some of this size July 25-40 on? And outside of that, what else caught your eye in the land of VIX options this week, sir?
Yes, I remember that July 25. You know what's funny is I owned some of that. I sold some of what I had yesterday. And I was kind of happy I got 80 cents for it.
Yeah, see, there you go. See, you took what you can get and got the heck out of Dodge.
Yeah, I mean, I've sold some money against the puts, and when I trade it like that, if the vol rally fails, I will get rid of most of the upside. I figure that's kind of my shot for this time. You know, if VIX does something crazy and does go up there, like they'll make enough money, but I got rid of, most of what I had. I don't think those spreads ever traded more than $1.20 or $1.30 in the whole cycle, to be honest. I'm trying to think. Because I was trying to, when we had that last vol pop a couple of weeks ago, I couldn't even get $1.40 for them, as I recall. So, I just, again, it always depends on what you have these spreads for. I got rid of what I thought was a prudent amount, but right now they're on their way to Palookaville, and I think, like usually when somebody buys that kind of size position, they have something else that's making them more money, so they're going to leave that on until the bitter end. But yeah, like when you have that rally and vol fails like it did yesterday, you're like, dude, trying to sell. And I own some August too that actually had some value, but they would not take anything unless you hit the bid yesterday, all day. And another thing, like for this, listeners, like if you trade the vol products with any kind of, like if you're kind of, how do I say, like daily trading, if if VIX goes up and there's a bid for vol, you're like, oh, the market really looks ugly. But the liquidity, like the VIX liquidity providers, when vol's going up, you put an offer in to sell some stuff in the middle, and it is gone in a second. Like before you're even hit the keystroke, man, your calls are taken, lifted. But when you're trying to sell something in the middle and you see VIX going up and nobody is taking your call spread, you're like, I had to chase like 20 cents down to actually sell some. It was such a bummer. So I reduced my size, but yeah, so that, like, you have your opportunity sometimes, and you can get a lot of market feel by just what the liquidity provider will take or what they don't take. So you can think about that. It's like with anything, if you're buying calls in Apple or something else, like if you can see if you put in a bid, and even almost if you put the bid in on the offer and nobody is hitting your bid, something is going higher. Like that thing is going to move higher. So every once in a while you get a signal. Just remember the markets are there, but they're not exactly what they appear. So take that with a grain of salt. But Mr. 25 by 40 or 25-40 call spread, it looks like, I think they might have, that might be a whopper. In the wrong way.
So what I'm hearing, Mr. Rock Lobster, if I read between the lines there, is that you single-handedly turned VIX. You chased all the bids away and you chased it all down. You are responsible for the vol turning around so quickly. All of us who couldn't get filled yesterday, blame the Rock Lobster. He went at it and he crushed all the bids out there as a result. So yeah, obviously this guy who's got this 25-40, he's working some other angle. He's got something else cooking, which is hopefully doing pretty well for him out there. So he's probably a little bit reticent to pull the trigger, but still interesting. You'd think you'd want to at least maximize some of your options position there as well. Sell it out and maybe you try to readjust it. Who knows? But yeah, not going on at all there, listeners. You know what else wasn't going on was a whole heck of options volume in VIX this week. I'll just kind of run through it really quickly. Today, 350,000 contracts, like we said on the tape. But let's do a top couple for each day here. The big trade today are the July 20s, 34,000 of those, followed by July 16 puts, 30,000, and we'll do a top three. July 25 calls, 23,000 as well. Yesterday, about 550,000 contracts on the tape. The most active contract was the July 16 puts with about 41,000 of those, followed by number 2, the July 19 puts, 33,000. And number 3, 33,000 of the AUG doubles, back to the 55 strike. Kind of intriguing out there. Wednesday, a light day, 356,000 contracts, even though the top trade was actually pretty active. The July 16 puts trading it up yet again, nearly 59,000 on the tape on Wednesday, followed by 27,000 of the July 17 puts for number 2. Maybe a ratio put spread. Interesting. And OC 20 puts, 21,000 of those for number 3. Tuesday, the final day of our week, obviously no paper, no trading on Monday. We were closed for the holiday. 448,000 contracts on the tape for Tuesday. 30,000 of the July 27 calls was our number 1 trade, followed by the 27,000 of the AUG 16 puts and 23,000 of the July 15 puts. Mr. Matt, anything light up your tape in the world of VIX options? And I know I always go to you. You kind of my go-to back testing guy out there. There's a bit of strategery that everyone loves to use in the land of VIX options, which is, of course, the 1-by-2 ratio spread. A little birdie telling me you may have done some back test wizardry on that, sir.
Yeah, we have some back tests, but I just want to give Andrew some props. I already have 2 notes in my, I could see why as an educator. First he said, find a strategy that fits you. So he said the strangle fit him. So I thought that was really interesting. I get that TD Ameritrade magazine, and they led with a story that was a lot like that. So I think that's good advice. And then also, I thought the comment on the quality of the fills is a really good thing. I've been seeing the same thing in VIX. You like sometimes you can't even get filled. Like even at the bid, like you'll sell 3 and then they'll fill you on 1 and move the bid. And like I can't believe it. And if it's going against them, right? So you could kind of get that indication of the market maker position. But yeah, what I like to do, I like to be back spread mainly, but I've been testing a lot of VIX strategies, and the one that I came up that looked good for me is this 1 by 2. So you sell 1 by 2, way out of the money, like a 10 delta, 6 delta. And so you're selling the 40, 45, like there's today it would be something like the SEP. So out a ways, 40, 80. So you're buying 2 of the 80s, selling 1 of the 40s for a credit, small credit. That has, that's been working, pretty well. I have some back tests in UVXY. By the way, UVXY, you can get filled anywhere, but UVXY, but that, I watch my P&L, it goes, that swings so fast, but it's the VIX P&L stays, is good, but stays a lot quieter. So, I think that the things that Andrew is pointing out are good for your listeners to take notice of. What type of strategies, fit your personality and your trading, and think about, how you feel about the movement of the P&L when it goes for you, when it goes against you, how to get comfortable with a particular strategy, Mark.
Did you say 40-80?
Yeah.
Oh my God. That horrifies me.
Well, like what happens is those 80s just explode, and it's a long way to go. I mean, it's not, and you're collecting a credit. So, and you have 2 of them. So it's not as bad as it looks. And the drawdowns aren't very bad, back to 2008. It's only, 11% is a max drawdown. So I know it sounds horrifying, but it's, it's not.
Yeah, I've always advocated on those 1 by 2s in VIXland to keep it a little tighter for obvious reasons. It sounds like your backtest machine likes to go big or go home. I like 40-80. Interesting. I'll have to look at that myself, because also you're obviously tying up a lot more capital with that too. The broker's going to put aside the 40 handles pretty much, or close to it. So yeah, that's interesting. I would not have expected that wide. I mean, you started saying 40. I thought you were going to say like 50, 40-50, maybe 40-48 or something like that. 40-80. You surprised me there. Not often am I surprised, Matt. So well done. All right, let's keep on rolling here. Let's go on out to the product you folks like to fade. VXX, not so much on the fade this week. Got some fade in today, but not so much net on the week. It was at about 29.5 when we kicked off the show. That's up, about 1.25 points from our last show, and actually some decent paper on the tape right now. We're talking about, let's see if I pull up the right product. That would probably help. It was at 113 when we kicked off the show here. And let's see where we are right now. For some reason, there we go. For some reason, my system doesn't want to play ball when I want it to. $1.54 on the tape right now. In terms of ADV, it's actually up as well. Up about 18,000 contracts, back over 200K again to 213,000. So perhaps the worst of the symbology issues are behind us out there. So let's do a quick top 10 in VXX land. Number 10, 16,000. Looks like actually almost actually 4 of them are still legacy pre-split adjusted. But everything else is now what you'd call standard traditional VXX, which is kind of nice. Number 10, 16,000 of the July 26 puts. Number 9, 17,000 of the SEP 35 puts. Number 8, 18,000 of the July expiring today 29 puts. So those are going the way of the dodo soon. Number 7, our first pre-split adjusted, the Jan 12 puts, 18,000 of those. Number 6, also VXX1, 18,000 of the SEP 14 puts. Now back to regular old VXX, about 20 grand of the July 28 puts. Number 4, 20,000 as well of the July 27 puts. Number 3, back to the old school, 21,000 of the SEP 14 calls. Number 2, 23,000 of the, actually these are all VXX1 here, of the SEP 9 puts. And number 1, 32,000 of the SEP 10 calls. So we got a little ways to go till we bump out all of the VXX legacy stuff from our top 10 here. Mr. Rock Lobster, anything lighting up your tape or the tape of your crazies in VXX this week, sir?
Yeah, I'm. I mean, as far as tape goes, we saw some. There was like some. I'm just going to say there was some at the money call buying. Started building up like middle of the week, and then it all flipped around to puts by yesterday. So it was all that was all very. Let's just call it surprising to me. So well, not so. Well, I should say is just like the persistent bid all week was surprising, and then we kind of got the how should we say it? We got the sell-off basically yesterday. So it's almost like the market was waiting for that sell-off. It felt like, and then by the time we got it, it petered as fast as it went. So mostly there was a little bit of call buying I saw midweek, and then it switched to put buying by yesterday. Like people started buying puts, and like today you look at the volatility was down like 10, 15 points. So I think, it's back to kind of like boring VXX kind of decay land unless we can get some actions with the VIX, unless VIX can actually make some new lows. I think it has a good shot to make new lows, but we'll see. So I'm not quite sure.
We shall see indeed. Mr. Matt, sounds like your minions over there running the backtest machine have been pretty busy over there because they're also cranking away on good old VXX. I know the 1x2 is pretty popular in VIX land. What's your go-to? What's your strategy du jour in VXX?
So the best one that is coming through in VXX is a longer term put spread. So we're seeing things like the 30-20 put spread for 490 right now. It's a 70-day, approximately 40 delta to the 8 delta. So by the 40, saw the 8 delta 70 days out. We have some other settings that we put in there, like don't trade it if the market's too wide. We have a 50 basis points limit on that. But yeah, that's our top testing VXX. Not too exciting, but it looks pretty good on our side, Mark.
I'd be curious if you tried it the other way with VIX. We've talked about it. People have written in before. I don't think we've had an official back test on it. We've kind of been middling on it in the past, but taking the same VIX strategy and going the other way with VXX, the 1x2 put spread in this case in VXX or UVXY, pick your poison. Be interesting to see how that performs because as people have asked about it before, it's never been that great, but these days it's moving like a biotech, both of these things. So they might perform a little better now than it has in the past. It might be an interesting one to back test for a future show, Mr. Matt. There you go. Coming on the show, you get homework. Look at that. See how lucky you are? All right. Let's keep on rolling here. Let's go on out to the other product you folks like to fade, which is UVXY. Once again, the fade not on for this one. Coming into showtime was at about 28. Puts it up nearly 2 points from where it was last week, but UVXY has just been all over the freaking map over the course of the past week. Good luck trying to buy some downside. I had some bids for downside in UVXY yesterday. They wouldn't even fill me even yesterday at the height of the madness, which is crazy. So that kind of goes, they weren't buying calls. They also weren't selling a lot of puts on this thing, even at the height of the craziness yesterday. So yeah, to lift offers, which is interesting. So yeah, weird stuff afoot out here in UVXY. In terms of today's action, about 113,000 contracts. Actually, there's 119,000 on the tape today. The ADV is 113, which is up about 14,000. So maybe starting to recover from the symbology madness. Not a ton. The biggest, most active trade today are the July 28s, 5,500 of those. Let's do a quick top 5 here as well. Then we got to keep on rolling really quickly. Number 5, 7,000 of the July 60s. Looks like only a couple of these are legacy. Let's see. Number 4, 7,500 of the July 25 puts. Number 3, 7,600 of the pre-split adjusted SEP 5s. Number 2, 8,500 of the July 20 puts. And top position UVXY, still the pre-split adjusted Jan 1.0 puts. About almost 10,000 of those bad boys out there. Mr. Rocklops, I know your crazies love UVXY. Really quickly, anything lighting up your tape out there, sir?
Well, I can tell you I have some puts that I bought in error. So I can just where a spot UVXY won't go to is 25 this cycle or by next week. I had a little mental lapse there, but anyway, what was lighting up the tape? Again, put buying. Some put buying yesterday. Again, just riding the close. There wasn't that, it was just such a weak performance overall with VIX, and then like the market just doesn't want to sell off, and you think, wow, like, it just, whatever, the market does, it doesn't go down. It's not like I'm wildly shorted. I am not by any stretch. So, but you would think you would have like a little bit more of a pop. Again, I think it might have something. There's just a lot of, feels like everybody's pre-hedged. They have their puts in SPX, and you get your 1.5% drop, and they sell them, and then the market stops going up. So, yes, but I think for UVXY, I did see some, again, put action, like the vol. People are getting savvier. They're like, hey, wait a minute, we're not selling off anymore, and this vol's not going to stay here. And it's amazing how fast the vol changes. I think, I don't know, Matt can look at it. I know he sees all this data, but how swift the VIX changes are now. Like the liquidity providers move SPX option vol so fast, which of course makes VIX move and the futures move. So I think it was just mostly put buying at the end. That was the only thing that was of interest to me. Like how anybody knew the Chinese were going to cut rates, who knows? But I don't know, somebody did.
Someone did indeed. And I want to get to see what our listeners know. Before we get to that really quickly, Matt, you put out an interesting article, which we just reposted for you over there, the Options Insider. People are always hitting us up about SKEW, about the SKEW index, and all that sort of fun stuff. You put an interesting analysis out about, is SKEW cheap or expensive, sir? Why don't you give our listeners a quick overview, sir?
Yeah, so I there's a lot of things to look at with SKEW, and we do a forecast of SKEW. So SKEW, basically the slope of the implied volatility in each expiration. So strikes, we do a tangent at the 50 delta. So, the people ask us about the SIBO SKEW index. They use, just like in VIX, a lot more options, and it gets a little bit, messier, I should say. And we've been doing ours for quite a number of years. We have and we use delta as the one axis and implied as the other, so that allows you to be more stable, more normalized. And so we could create these regressions and project what the slope should be given some of the important independent variables. So, and then they're also comparable between stocks, and we also look at the slope for all the components, and we talked about I talked about that at the top of the show quite a bit. But we also do these ratios, of the SPY to the IWM and all the best ETFs for other stocks that you're looking at. So, I did this article. You go over to Option Insider and read it, but it does look like, and Andrew mentioned it as well, that the SKEW is pretty steep, meaning the put implied volatilities are trading higher than the calls in the SPY ETF, especially. The components are quite low comparatively. So that again, we haven't seen that since the Volmageddon. So read the article. That's just a brief synopsis, Mark.
Good stuff. Check it out for yourselves. You can find it over there at ORATS, or of course, theoptionsinsider.com is right there on the homepage for you as well. As we keep on rolling, it's time for you folks to join us on the show. It is time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, come up against it. Want to make sure you folks get on the show, including our live members. All of our pro members get bumped to the top of the list, including, it looks like, one of our newer members, Options Queen. Glad to see you're asking questions there in the chat. Welcome to you and all of our other new members there on the pro side there. Options Queen wants to know, I like this. What's the one thing about the vol market you wish everyone knew? Well, kind of the gut reaction I have to that is, hey, VIX options aren't priced off the cash. If you know that, you're ahead of 95% of everybody else out there in the world of volatility trading. But fun, jokey answer aside, it's actually a deceptively deep question. Mr. Rock Lobster, maybe we'll start with you, sir. You've been educating folks on vol for a while. What is the one thing about the vol market you wish everyone knew, sir?
Oh, my gosh.
Don't buy and hold VXX. Well, that's a good second one.
If everybody knew everything, then we wouldn't have a business. It's kind of good that nobody knows anything. I think also the difference in what makes up the product. Actually, I'll make it one-liner. What makes the particular vol product move? What makes VIX move, VXX move, UVXY move? What exactly makes it move? I think if people understood the dynamics in the products, it would help. It would be much more helpful. So I think that would be, if you're going to learn one thing, learn what moves the products.
Interesting. Mr. Matt, any thoughts here for Options Queen? What's the one thing about the vol market you wish everybody knew, sir?
There's another thing I wrote down for that Andrew said. So
he's just full of pearls of wisdom today.
I know. And I've been noticing that too. The VIX moves so fast. Right when the stock starts to move, the VIX it almost looks like the VIX is moving right before it, even sometimes. The thing that came to mind right away is that anything can happen in volatility. Like we used to say, GameStop went to 1,000 vol. Who knew? So anything can happen. You just don't make assumptions that that since it hasn't happened before, that it can't happen again. And we've seen Volmageddon, we've seen GameStop vol. Anything can happen. That's mine, Mark.
Anything can happen. That's a good one. Another kind of quick one is probably don't buy and hold VXX or UVXY, any of these horribly eroding products. If you don't understand why, check out some of the earlier archives. So those are a couple of pearls of wisdom. You get those. You get that VIX options aren't priced off the cash, and you get that you shouldn't buy and hold those ever eroding products. Again, you're ahead of at least 80% of the game out there. We got Luigi in the chat. He says, he got in on some VIX puts, and he says, I guess he's not fading you anymore, Mr. Rockster. Now he's liking you again, because he says the lobster and the me are like this, and he put like a fingers together emojis. Apparently you and Luigi are tight, Mr. Rock Lobster. I didn't know. All right, as we keep on rolling into our final segment, it's time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, let's see how we're doing here as we come up against it. We've got, at the end of the show, we got spikes hanging out at not that far away from where it was. It's at a 1660 to end the show. I'm looking here. We didn't have any 16 handles here. VIX Cash, similar story, a lot lower, though, threatening a 16 handle, about a 1610 or so. And we were at, let's see, Tom Jark from MIAX was the highest last week at 15 3/4. We have Mr. Rock Lobster was in the middle there at 14.99. I was at the lower end, 14 double. And maybe if this day continues a little bit beyond, perhaps we could get there, but not so much right now. So no winner chicken, even though Tom is looks like about a little over a third of a point away, about a quarter of a point or so, between a quarter and a third, depending on where you're looking in the VIX. Not so much in spikes. He's almost a point away in spikes. Again, getting that extra juice still floating around in spikes. We had a bunch of listeners who were all over the place. Nobody had a 16 handle. Looks like one of the closer ones was our buddy Mr. Unlimited in the chat. He was at 15 double. And so he was about half a point away out there. So good try, everyone. No winners this week, which means, of course, Mr. Matt, you get the chance to go first this week, sir. What are you feeling for vol this time next week, sir?
I think we're going to, it's going to be after some earnings. So I think it's going to be up around 17.5.
17.5. So you're thinking some more juice back in that. Interesting. The Oracle of New Hampshire doesn't put that out there lightly, listeners. So take that under advisement. Take that under advisement out there. Mr. Rock Lobster, you were the next closest, so I shall allow you to go next, sir. What are you feeling?
So what did Matt say?
17 and a half.
17 and a half. Wow, that means I get to sell some some put flies. That's a good one. I'm gonna say, I'll tell you what, I want to see VIX at 14. I just know it will never get there. So 17 and a half isn't bad. I'm actually gonna go. I think it'll be a little. Today is such a huge markdown. I'm gonna say 16.25.
16.25. So not that far from where it is right now. A little lower on spikes, a little higher on VIX. You know, I like what Matt's saying. That wouldn't be, I mean, it actually wouldn't be that good for me, but I could deal with it. I have some other positions on that could probably help. But, you know, yeah, next week, it's a bit of a weird one. We do have things kicking off. It's a traditionally quieter time, but also we have earnings popping off and got some big ones that are pretty mobile next week, including the financials, which could carry us in some interesting directions. So, yeah, Mr. Rocklofter kind of stealing my thunder. I was thinking in the lower 16s. I'm going to go a little bit higher than him. I think still a 16 handle next week. I'm going to go a little bit higher. I'm going to say pretty much where Spikes is right now. I'm going to say 16.65. So there's your market there. We got Matt on the upside, 17 and a half, me at 16.65 in the middle, and Mr. Meatball, or Mr. Rocklofter at 16 and a quarter. Oh, Mr. Limited playing in the chat. He's at a 15 handle. He's going way south. Oh, Luigi's playing to 18.35. We're all over the freaking place today. I like that. That's what makes the market. So listeners, hit us up. If you're not listening live, you guys can play too, and gals. Hit us up. You know where to find us. Get those cues in like you did last week, and we'll see if we get some winner chicken dinners out there. All right, everybody. Unfortunately, that music means we have exceeded our allotted time on all things volatility, but don't worry. If you're listening live, you're on the pro side, and you want a little more in your ear holes, we'll be back in exactly 55 minutes to break down the madness of the world of options on Options Oddities. So stay tuned for that. But before we go, let's go back around the horn. Oh, Options Queen playing too, 17 and a quarter. Ooh, a lot of folks buying vol. Matt, I think you started something here. You got a vol buying palooza going on here in our chat. So outside of that, Mr. Matt, if folks are intrigued, they want to check out what you got cooking, maybe they want to try out your back tester for themselves, where should they go? What should they do, sir?
Yeah, come on over to ORATS.com. We're going to have a website coming up next week, a new website, so we're excited about that. Our scanner is going off. We've been doing a lot of improvements there, including a distribution of historic returns that you can scan on and sort on. So a lot going on at ORATS.com, Mark.
I don't know. I'm intrigued by this. Matt going higher, a lot of our listeners going higher. I'm intrigued by that. Mr. Rocklobster, what are your thoughts on everybody going upside? And what do you feel, I should say, and where should folks go if they want to hit you up about it?
Well, obviously, you go to optionbit.com memberships. You can go to our Shiny Vol Trade Club or Vol Edge, or you get both. Actually, if you're an annual member, you get both. You get vol trades every week, and you get a vol trading class. It's a pretty good deal. People like it. It's actually our most popular seller now, as we grow exponentially every year, apparently. So as far as what am I keeping an eye on? Well, I just looking at some of this, all the people looking at upside, it's hard to fight the rates going lower thing, like this Chinese thing with the rates going lower. And I'll be curious to see really if we get a little bit of calm in the market for the next week over this, because remember VIX was diving hard a couple weeks ago, and then Powell started talking taper tantrum and all this kind of crap, which of course they never do anymore. And that started kind of the short-term vol pop, and it hasn't really subsided we haven't really gotten back to those vol lows. And with the Chinese kind of throwing this out with 50 basis point cut, we will see if that materializes in the lower vol. I would like it to be lower because that would be a little bit more of a home run. However, I don't think it's going to happen. I'm mostly going to just dribble in with a base hit. But that's kind of what I'm looking at from a vol point of view. If this one really sticks, if this rate regime idea sticks for a couple of weeks.
And you know where to go if you want your options trading to stick. MIAXoptions.com/spikes is the place to go to learn about spikes. If you want to check out a little bit of activity while you're at it, MIAX.shift search MIAX.com is the place to go. All those cool new features. They add new stuff every Friday. No idea what they're adding today. I guess you can go over there and find out for yourself. You can't beat the price. So MIAX.shiftsearch.com is the place to go for that. On behalf of everybody over there in MIAX land and Mr. Matt, everybody over there in ORATS land, and Mr. Rock Lobster and everybody in the land of the pit, and indeed myself. Thank all of you out there for downloading, streaming, and subscribing. Thanks to everybody who listened live. If you didn't, if you haven't joined the pro yet, get in there. You're missing out on some fun. In fact, since we had Matt on, we'll be back in less than an hour, but maybe in between if you're listening live. In honor of him, we'll replay the advisor's option, give you a second dose of Matt while you're waiting for oddities to come back up. And we'll be back here in exactly, we got to get going, 50-odd minutes now for options oddities or everybody else. We're back on Monday with the option block all the way through to another Friday and another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's Volatility reimagined. Learn more about Spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.